Good morning. Market Day report here on a Thursday. We've got a few reports we want to break through for you. Weekly jobless claims up over 242,000, and that's quite a bit higher than most expected. So is that putting some pressure into the equity markets? Oh, and then throw in the Trump tariffs. As he's on Truth Social this morning, President says no, March 4th is the date for tariffs on Canada and Mexico, and an additional 10% on Canada. So let's go to the equity markets quickly here. And this is Dow, which has been trading in a little higher territory. Overall, Dow, NASDAQ, S&P, all in the red for the week and the month. And the NASDAQ has actually been in the red for the year. So definitely some pressure in our equity markets. We're also looking over at the dollar index, touched on this about 30 minutes ago at 107.01. It's actually improving now after taking a break this week, losing about 1% of its value. All right, we'll start with the corn market. In December, opens the trade 462.25. It's down 4 3/4 cents. For soybeans, now moving higher, up 6 cents. May contract 10.47 1/4. Want to hit these quickly as well. Soy meal contracts are lower. Soy oil has been down 4 consecutive sessions. Is trying to turn things around this morning in the trade. And we'll hit new crop contracts for wheat. July, Chicago, 12 1/4 lower, 5.81 1/2. For hard red, July is off 12 at 5.99 1/4. And spring wheat, December down 5 1/4, 6.54 3/4. Trying to break a 6-day losing streak for spring wheat. And the cotton market was higher in the overnight session, up 17 now, 68.92. All right, let's go across town. Nesvick Trading, that's where we find Tommy Grisafi. And Tommy, thoughts on this morning?
A lot of stuff. I've been up since 4 in the morning, feeling good here in Nashville, but there's a lot to talk about. Of course, I'm going to be able to join you guys later, and I'm going to fill in for Scotty on Cow Guy Close. Let's go with corn. Captain Obvious here. The American farmer is going to plant a lot of corn. They've been telling us they're going to do it. I've been hedging a lot, and myself and probably, Tony, every analyst who comes on your show says corn's up X and beans are down this. It's like corn's trying to buy acres. You're actually seeing the switch of that. In D.C. today, we have the Ag Forum. They released the numbers early. Corn was up. Now it's down 7 in the front months. Corn's come way off the highs here in March and May. As you know, folks, we're moving from March over to May corn. USDA said American farmer, they think, intends to plant 94 million acres of corn. We've heard bigger numbers put out by private analysts. Seed salesmen, again, my best source is the people who actually sell corn seed, say the American farmer is going to plant a lot of corn. When I run numbers through spreadsheets, corn shows break-evens, profits, small losses. Soybeans show significant losses for a lot of people. I don't know why anyone would run out and get excited to hedge a loss in soybeans when you still have a chance in corn. But again, that spread correcting today, corn down 7, no beans up 4. A lot of spread action here as a lot of grain has to be priced. First notice date tomorrow, I believe, in all March contracts. Real quick, outside markets before we go on break, I looked down at my phone. Gold down $50 an ounce. It's been really interesting. A lot of people put so much value. You had a dollar chart up earlier. People put so much value in what's going on with the dollar, and the dollar's going to get weak and gold's going to make all-time highs. Fine if you're in this thing for multiple years, but on the day-to-day moves, down 50 catches people's attention. Back to you, my friend. Let's take a commercial break, and we'll talk livestock.
Well, you said it. We'll take a break. We'll come back, and we'll talk proteins in a moment. Market Day Report continues after this. So we're waiting for cash cattle to develop, and maybe it'll be tomorrow before we see it, because when we look at the live cattle, remember that February contract, which is up 42 right now at 199 1/4, that's got to converge when it expires tomorrow with cash cattle, which was 199 in the South last week, 200 in the North. So Packers kind of dragging things out this week. We'll see what happens, obviously. Tomorrow will shake out. 195.60 on the April. That's up 97. And then to the feeders. And feeders have been up 2.8% week over week. March contract 275.70. It's $1.32 higher with the April at 275.10. Make that 274.95 now, up $1.42 with our live quotes. Hog market, 5-day losing streak. The market broke that yesterday, but back in the red as we open up. April 86.42, $1.87 lower. Lost the 100 handle now on the June contract, so July leads at 101.12, and it's down $1.25. And one more before we get back to Tommy Grisafi. Class 3 milk futures are moving higher. USDA at their Ag Outlook Forum, they believe dairy milk cow inventories, this is the actual cow, so your production, the inventories will grow on stronger all milk production. I'll dig in a little deeper and find out what they're expecting on the different classes, but something to keep in mind. Tommy Grisafi's with Nesvick Trading. And quickly looking at the proteins, thoughts?
I think the cattle market's relieved to see corn now down 9.5. As a cattleman, I know they had a first part of the year feed needs bought, but if we would have really hit a big bull market here in corn and started trading 550 corn, that would have affected the margins in cattle tremendously. Feeders way outperforming the live cattle. We talk about feeders being the leaders, and I talked to some friends in the hog industry. They're getting scared. We need to keep that June contract going. Cost production to raise hogs did not go down the last few years. So many things are so expensive. Of course, from a consumer standpoint, there's not a consumer in the world who wouldn't like to buy beef at a lower price, pork at a lower price, chicken, eggs, anything else. There's two people here. There's the folks who watch this show, who produce all this stuff, and there's 99% of Americans who want to go to the grocery store and buy high quality, affordable food. And we have to understand who our consumer is, and they're not in the mood for really, really expensive stuff. Now, you wanted to talk energies? Let's do it. Crude oil. Crude oil, what I think became affordable the other day. $68 crude oil going into planting. I put a text alert out to clients of mine saying, call the fuel guy or girl. Didn't necessarily want to do anything in futures or options, but farmers buy fuel on the spot market, and there's lots of good fuel services where you can prepay or order tankers full. When crude gets a 68 in front of it, we want to be buying that crude oil up $1, $1.25. We know we're going to burn through a lot of fuel in the spring. We get that summer driving season, and normally we see prices go up in the pump in the first few weeks of June. Back to you, my friend.
All right, Tommy Grisafi, Nesvick Trading. We'll see you soon.